Hello, everyone. Today we'll be reviewing ACC406, Managerial Accounting, more specifically looking at Chapter 9 budgets. One budget of this video is production budget. In this question, the following information is key. Budgeted units to be sold for each quarter of 2023 goes as follows. Quarter 1, 1,000. Quarter 2, 1,200. Quarter 3, 1,500. Quarter 4, 2,000. Company policy requires 20% of the next quarter's sales in ending inventory. Beginning inventory of t-shirts for the first quarter of the year is 180 units. Sales for the first quarter of 2024 are estimated at 1,000 units. First step is finding desired ending inventory. Think back to the policy where the company requires 20% of next quarter's sales. This means that for quarter 1, you will be using next quarter sales, which means quarter 2. For quarter 2, you will be using next quarter sales, which means quarter 3. For quarter 3, you will be using next quarter sales, which means quarter 4. And for quarter 4, the question told us that quarter 1 of next year is 1,000, which would be our next quarter sales. The next step of the production budget is building the budget. A key thing to remember for budgets is that the format and titles are very important. Ensure you understand and have reviewed how your professor develops and builds their budgets. Row 1 is sales in units. This is more straightforward as it's just copying and pasting the amounts that the question has given you. For the year-end total of sales in units, all you do is like a typical total, you add all the quarters together. Row 2 is desired ending inventory, which is why I went through finding desired ending inventory first, as it makes life easier when it comes time to building the budget, as you can now just input the numbers from step 1. A key thing that I would like to point out is that the year-end total is not like a typical total. You do not add all the quarters together, but instead, you keep in mind this tip. You are looking at desired ending inventory, which means that your year-end total will be the same as your last quarter on the budget, which would be quarter 4. So again, as you can see, quarter 4 and the year-end total are the same number. Row 3 is total needs, found by adding sales in units with desired ending inventory. Row 4 is beginning inventory. For quarter 1, the beginning inventory amount is given in the question. As for the rest of the quarter, you need to imagine as if you were a business owner. For example, if you end the month with 5 pencils, that means you will start the next month with 5 pencils. Same rule applies for the production budget. Whatever amount you end the month with, you will start the following month with. So as you can see, again, this number was given to us in the question. Then you can see you end quarter 1 with 240. You're going to start quarter 2 with 240. Same thing if we take a look at quarter 3. The previous quarter is quarter 2. You end quarter 2 with 300, which means you're going to start quarter 3 with 300. As you develop and build more budgets, you will see a pattern per production budget when it comes to ending inventory and beginning inventory. It kind of begins looking like a snake. Lastly, row 5 is units to be produced, found by minusing total needs by beginning inventory, which I also showed by putting a bracket on any number that is negative. Another thing that I would like to point out is for beginning inventory. As you can see, the year-end total is 180, not following the typical total pattern that we've seen in sales in units, in total needs, and in units to be produced. Similar to desired ending inventory, when you're looking at beginning of inventory, you're putting an emphasis on the word beginning, which means that you're going to take the amount that you began the budget with in beginning inventory, and you're going to use that same amount when it comes to the total number in the year-end total. So this is how you complete a production budget question. The next budget in this video is direct materials budget. With this budget, keeping in mind that you want to solve the problem step by step. Trying to answer it as a whole will be difficult and lead you to miss key information. In this question, the following information is key. Budgeted units to be produced for each quarter of 2023 goes as follows. Quarter 1, 1,060. Quarter 2, 1,260. Quarter 3, 1,600. Quarter 4, 1,800. Plain t-shirts cost $3 each, and the factory needs 1 t-shirt. Policy is that 10% of the following quarter's production needs in ending inventory. Factory has 58 plain t-shirts on hand January 1st, 2023. At the end of the year, desired ending inventory is 106 plain t-shirts. Step 1 is finding production needs. As you can recall, the policy stated that for ending inventory, it needs 10% of the following quarter's production needs, which is why finding production needs is our first step. Row 1 is units to be produced, given in the question. Row 2 is direct materials per unit. The question stated that the factory needs 1 t-shirt. And row 3 is production needs, found by multiplying units to be produced by direct materials. Step 2 is finding desired ending inventory. Think back to the policy where the company requires 10% of next quarter's production needs. For quarter 1, you will be using the next quarter needs, which means quarter 2. For quarter 2, you will be using next quarter needs, which means quarter 3. For quarter 3, you will be using next quarter needs, which means quarter 4. The last step of the direct materials budget is building the budget. The first 3 rows are the same as step 1's table. Row 4 is desired ending inventory. Just like the production budget, the reason we do ending inventory calculations first is to make building the budget easier. To test your knowledge, I have blocked out the year amount for ending inventory to see if you can remember how we solved it in the production budget. Pause the video to give yourself more time if need be. So the year amount is 106. How you get 106 is you want to put an emphasis on the word ending, which means you're going to take the ending quarter's amount. So quarter 4 is our ending quarter. You're going to take quarter 4's desired ending inventory, which is 106, and that is going to be our year amount. Row 5 is total needs, found by adding production needs to ending inventory. And row 6 is beginning inventory. Just like production budget, you are given quarter 1's amount in the question. And as for the rest of the quarters, you will do the snake-like trick. To test your knowledge, I have blocked out the year amount for beginning inventory as well to see if you can remember how we solved it in the production budget. Pause the video to give yourself more time if need be. So the year amount is 58. How you get 58 is you want to put an emphasis on the word beginning. So if you take a look at our budget, our beginning quarter is quarter 1. That means that quarter 1's beginning inventory amount will be our year amount. So quarter 1's amount is 58, which means that our year amount will be 58. Row 7 is direct materials to be purchased, found by subtracting total needs by beginning inventory. Again, this is shown also by the brackets around any number that is negative. Row 8 is cost per t-shirt. The cost is found in the question, which is $3 per t-shirt. Finally, row 9 is direct materials cost, and that is our total direct materials cost, found by multiplying direct materials to be purchased by the cost per t-shirt. This is how you solve a direct materials budget problem. Keep in mind this problem is slightly simplified in order to allow you time to understand key concepts before approaching more challenging problems. The last budget of this video is accounts receivable collections. In this question, the following information is key. Sophia expects the following total sales. Quarter 1, 10,000. Quarter 2, 12,000. Quarter 3, 15,000. Quarter 4, 20,000. Sophia Company expects on average 25% of total sales are cash and 75% of total sales are on credit. Of the credit sales, Sophia expects that 90% of them will be paid in cash during the quarter of sale. The remaining 10% will be paid in the following quarter. Balance in accounts receivable as of the last quarter of 2019 was $1,350. This will be collected in cash during the first quarter of 2020. Step 1 is percentage breakdown. The question told us that the company splits their revenue into 25% cash sales and 75% credit sales. From those credit sales, 90% occur during the quarter, and the other 10% occur in the following quarter. This is important to keep in mind, as if you mess up the percentage breakdown, you will get the answer wrong. Step 2 is finding cash sales. This step is pretty straightforward because it is only cash sales, so you only need to factor in the 25%. And it is also straightforward, as quarter 1 will be quarter 1's number, quarter 2, quarter 2, quarter 3, quarter 3, and quarter 4 is quarter 4's number. Step 3 is finding the credit sales. Again, 75% of sales are credit. From those credit sales, 90% of those occur during the quarter. 10% occur in the following quarter. Quarter 4's amount in 2019 was given in the question. Now let's take a look at quarter 1 in 2020. We need to do two calculations, one for during quarter and one for following quarter. Do not forget to first multiply the 75% so you can get the credit portion out of that quarter's revenue, and then multiply by either 90% or 10%. Pause the video to give yourself time to find quarter 2, 3, and 4's amount before I reveal the answers. These are the following amounts for quarter 2, 3, and 4's credit during month and following month. Last step of the accounts receivable collections is building the budget. Row 1 is cash sales, found by using the numbers we used in step 2. Row 3 is the amount from quarter 4 in 2019, which is included in quarter 1, as that's what the question told us to do. And row 4 is the amount from quarter 1 in 2020. Again, keeping in mind that one number is for during the quarter and another number is for following quarter. So if we take a look at quarter 1, we see that this is a number that was 90% of the credit sales. This was a number that was 10% of the credit sales. So as you can see, this was in the quarter. So this occurred during the quarter. This one occurred in the following quarter, which is why it's in the row of quarter 1, but it's in the column of quarter 2 because that's our following quarter. As you practice building this budget, this timeline starts to become a little bit more clearer. Row 5 is the amount from quarter 2 in 2020. Same as you can see, this was the 90% that occurred during quarter, which is why it's in quarter 2, and it's in quarter 2. This is the 10% that occurred in the following quarter, so it's in the row of quarter 2, but you count it in quarter 3. Row 6 is the amount from quarter 3 in 2020. So same thing. This is in quarter 3 and in quarter 3. This is in quarter 3 and in quarter 4, as it's the 10% of credit sales in the following quarter. Row 7 is the amount from quarter 4 in 2020. So because we end there, you only get the 90% that occurred during the quarter. Lastly, the total cash receipts is found by adding everything in each column. So if we take a look at quarter 1, for example, We're going to take 2,500, we're going to add it to 1,350, and then we're going to add on 6,750, and that's what's going to give us our total cash receipts number of 10,600. You will do the same for quarter 2, quarter 3, and quarter 4. Thank you for watching. I hope you found the videos helpful. As a little recap, we talked about production budget, direct materials budget, as well as accounts receivable collections. Visit the past YouTube channel for more videos to help understand challenging concepts.